I'm Charlotte McLeod with investingaids.com, and here today with me is Nick Hodge, publisher of Digest Publishing. Thank you so much for being here. Great to have you.
Charlotte, pleasure to be with you.
Really good to be speaking, and of course we're here in New Orleans at the New Orleans Investment Conference, and I was telling you just before we turned the camera on, I couldn't find the title of your presentation that's coming up this afternoon anywhere. So what is the title? You always have such creative titles.
The title this year is Your Battery Passport to Profits.
Can you expand? What is some of the themes that you're going to go over?
Yeah, sure. So the main launch pad is that in 2027, the European Union will require all electric vehicles that have a battery inside them, which is all of them, to have a battery passport that says where the source of the battery came from, where the minerals come from, were they mined, and if so, what was the emission scope that was generated with those mining, and what percent of the battery was recycled content. So that's just the EU. In Japan, next year, they'll start requiring emissions data for batteries. And in the U.S., as part of the Inflation Reduction Act passed in 2023, they're requiring, sourcing of materials for the batteries to be eligible for the incentives. And so from there, you can launch into a lot of different topics. But for me, one of the main takeaways is the data. It's sort of, I don't want to get right into blockchain, but it's about tracking all the things. I can keep going, or you can ask a question if you'd like.
Yeah. Let's keep going on this topic. I guess I'm looking for the investor angle here that you want to present. Yeah,
I mean, there's a couple of different angles, right? So let's just start with the battery passport itself, right? Volvo's already done this. They sort of front ran the legislation or the mandate in 2027. They're already producing battery passports. There's a company I'm invested in called MineHub, and that I've been recommending. It's listed on the TSXV, and they've already partnered with some of the biggest mining and wire production companies in the world. So they partnered with Codelco, for example. Sumitomo has given them capital. And I should just give an example, right? So if you're Codelco and you're the world's largest producer of copper, you have a lot of accounts. You have a lot of hard assets on your mine, and you are doing a lot of things. You're mining, yes, but you have mining trucks. So you have to track how much fuel the mining trucks are burning. You have to track how much ore the mining trucks are hauling. You have to track the recovery rates. You have to track the emissions associated with the processing infrastructure. And then guess what? Once it's off your property, you've got to talk to the shippers and the trains and the exchanges. And so it's lots of people are involved in getting a rock out of the ground to wire your battery, right? And you ask, what's the investment case? Well, it's a very sticky business. So once MineHub gets a contract with Codelco, they have to onboard all of Codelco's partners, right? Caterpillar, the fuel providers and suppliers. And so it becomes a very sticky business when you get all these clients. So that's the investment angle there. You get a percentage of whatever it is, right? A percentage of what's being mined or a percentage of the concentrate that's being sold. And they have different platforms. So tracking emissions, tracking concentrates, even tracking assays. There was a case last year in Canada where a CEO was falsifying assays. You can't do that if they're digitally put on the blockchain, right?
Yeah. Okay, that's very interesting. And all right, so battery passport, I've heard a little bit about this. For you, when we're talking about batteries, what counts as a battery metal for you right now? It seems to be ever expanding in some ways, yeah.
Yeah, I mean, a lot goes into the manufacturing in EV. The main one's lithium, and that's going to be that way for a while, whatever your battery chemistry is, right? There's going to be some nickel in there, and then depending on, if it's a nickel battery or a phosphate battery or whatever, you're going to have different inputs. But the main ones are lithium, nickel, and copper, right? And so that's primarily where MineHub is operating it in copper right now, but this is going to happen for all the metals, right? So, and then we could just maybe go into the next part of my talk, right? So it's not just the government saying you got to clean this up and have an EV. The LME, the London Metals Exchange, is saying starting next year, all aluminum producers need to be submitting emissions data to the exchange, right? So this is now going beyond batteries and beyond EVs to aluminum, right? So my thesis is that it's going to go to the entire mining industry, right? And it's not just, I'll just keep going on the theme, right? So we talked about emissions, and the ultimate goal is to reduce them, right? That's why they're making us track all the data. It's not just an exercise in feeling good about doing it, right? They want to reduce it. So what comes into play then is mining differently, and that's where my talk goes. So you have to first start tracking all the data, and that's MineHub. But the other investment case is these different sort of technologies that we're using to leach the copper that's going into the batteries. And so there's basically three main ones out there right now. There's Newton, which is from Rio Tinto, and then there's Jetti, Jetti, which is from BHP, and then there's one called SIBO, which there was just an announcement on recently with Glencore using that technology at an asset that they have called Lamos Bias. So people are talking about that here at this conference, and that's where the industry is going. It has to clean itself up. I have a slide from like a drill core with geologists writing in pencil on the paper. Like, we're not going to do that anymore. It's got to be digitized, or there's going to be software that digitizes that sort of handwritten stuff, right? But back to Newton. So these companies, these big miners, BHP, Rio, they're investing now in smaller juniors, which is where I'm interested to use these technologies. So Newton, just earlier this month in November, optioned a very large project called Altar from Aldebaran Resources, which is a fairly well-known junior mining company. And shares of that company went from 90 cents or $1 to over $2 on this announcement. And so that's the investment case, right?
Yeah. And okay, so let's talk a little bit more about this new types of extraction technologies. So there's the environmental angle. Are they also more effective? Because I know the mining industry moves quite slowly on those kind of things. Is it going to be better in that way too?
Well, there's a couple of things. So they're more effective at extracting the metals from sulfide ores, which we typically have a harder time doing. The refractory ores that have to be baked, requires high energy inputs or whatever. So Newton and Jetty, I believe, are organic solution. We're using organics to bugs to eat the metals out, and so that's one thing. It allows us to more efficiently extract metals that were hard to extract. The other thing it does is it allows us to clean up waste, right? When you mine, you hear about recoveries, right? We're getting 80% recovery. We're getting 90% recovery. Well, arithmetic tells you that if you're getting 80% recovery, you're leaving 20% of the metal in the waste piles, right? So some of these technologies, we're going to go in and we can literally mine the waste, right? And if you're interested in cleaning up your operations and making them more green, well, when I was in elementary school, we used to do the 3 R's: reduce, reuse, and recycle. If you can reuse and recycle the material that's already been mined, it's cheaper and more cost effective and less energy intensive, and therefore less carbon emissions are associated with it.
Okay, this is really interesting. And how does it play into copper supply-demand dynamics? Because I hear quite frequently that for far further into the future than we are now, there's going to be this crunch, right? Does this help us fill the demand?
Absolutely. And at potentially a lower capital input, right? So all the time we hear these majors got to replace the reserves. We hear there's going to be a copper deficit. And we hear that the mines are old. We hear that Escondida is 100 years old, and all these mines are approaching their centennial anniversary. In Glencore's case, which we were just talking about in SIBO, they're investigating if they can use SIBO to extend the life of their mine. So they're getting into lower grade ores. They're getting to the end of their mine life. If they can use SIBO to extend the life of their mine, then the answer to your question is yes. It will affect the long-term supply implications, because we can leave existing mines running longer. Well, it's going to be 3. 2, you can extract the waste of former mines, which we already talked about. And then the third would be you can apply these new technologies to new mines and deposits.
Okay, so you've given us some interesting ways to approach this, including with the juniors who might have partnerships with the majors that are deploying this technology. I was going to ask as well, should people take an interest in companies focused on the battery metals, the 3 main battery metals that you mentioned? Are you looking in that direction as well?
Absolutely, and always. Yeah, the commodities are more cyclical, of course. We just had a major lithium bust after a major lithium boom. You'll likely see a lithium boom again. That's how these companies go. But yes, we've been writing, and I should tell you that the main way I invest in these is via private placement, right? So yeah, we've been investing in lithium companies. We've been investing in copper companies and silver companies as well. So obviously silver prices have been stronger lately than lithium prices, and then copper prices hit $5 in 2024, and then they're still right around $4. So those are more attractive to us right now. But yeah, we're always looking for quality deals in the battery metal space. Absolutely.
Okay, and let's go in that private placement direction. So I think that many people would like to do that. Maybe they don't know how, or they don't know if they are qualified to do that. So what details can you share?
Yeah, so I've been doing private placements since, I guess, 2015. I've done just about 100, maybe over 100 of them now. You do have to be an accredited investor. There's certain definitions of that. I won't run through them now, but there's a list of things that can make you an accredited investor. If you Google Nick Hodge private placement, I have lots of articles and reports up that go over those things. But there's advantages that come with them. And, the entries aren't that onerous, right? I was reading an article recently that so many households in America were millionaire households, right? Like 401k millionaires or something, right? Like 10% of households, right? Well, that means that 10% of the country is an accredited investor, right? If they got $1 million. So anyway, I think more people can do them than they think. And that's sort of what my mission is recently, getting these people to realize that they can invest via private placement, because there's really advantages that come with them. We talk about how junior mining is tough. We talk about how, it's a shark's game and there's a lot of cheap paper. Well, private placements allow you to get that cheap paper, right? And that's what we do at Digest Publishing. And we have a service called Private Placement Intel, where me and Gerardo, my partner, profile the companies that we're investing in, and we do write-ups and we send them out. So we're vetting them for ourselves and our families. I have a family office, right? So we're vetting these deals for how we're going to invest our own capital, our family's capital, and then we pass them along to folks who are interested in doing them alongside of us. And then we have free things up on Digest Publishing if you'd like to learn about private placements, why they're advantageous, and what the requirements are for you to do them.
Okay, I think that's a really good mission to help people get that knowledge so they can go there, because I do think that probably more people can do them than you might think. Okay, so anything else you would add? We've been kind of on an energy note right now. Anything else you're looking at in the energy sector that looks good in 2020?
Yeah, so that's actually the last slide of my presentation, is things that are tangential to this discussion. And then there's two. There's recycling. I've been looking at plastic recycling deals. There's one called Pure Cycle that I was invested in for a while, but recycling batteries, not just batteries, but I'm invested in a company called Cotec that takes the rare earth components out of hard drives and is going to recycle them, and they'll have a bankable feasibility study out by the end of the year, and they're part of a strategic mineral alliance with the State Department of the United States of America. So the governments are finally wising up, which is something we should mention. It took them about a decade to realize some of these things, but they're now starting to realize. And the last thing is uranium. So uranium's clean baseload power. I've been a uranium bull for a long time. Our moment is here. We can't have the AI now without the uranium. Who knew, Charlotte? Now the Google needs it. Now the NVIDIA needs it. The Meta needs it, et cetera, and on down the line. So feeling pretty victorious about that we now need uranium for our clean future. But the reactors are getting smaller, and that's probably where I'll leave it. So if we're talking about making the mines more efficient and using these new extraction technologies and tracking the emissions, why would you just power a mine with a small modular reactor, is what I'm starting to wonder.
That is a good question. Okay, and yeah, who knew that when all this AI craze started happening, that was the direction it was going to go in? I didn't think that, but
You did.
There you go. Okay, should have been listening to you in whatever time that was. Okay, let's talk a little bit more about uranium, because you're telling me the time is now, and I think many people are still excited, but they have gone through this year where the price is kind of consolidated in that 80, 85 kind of range. Are we going to break out of that? What do you see coming?
Yeah, so mining's a long time frame. The time, you just said the time for uranium was now. The time for uranium was 2018. I gave a talk in New Orleans in 2018. The title was "The Time for Uranium is Now." And it was telling you why uranium was going to be needed for our clean future, right? And so now we've had the first run of the bull market. We made a lot of money. We were invested in companies like URZ that was sold to Azarga, that was sold to Energy Fuels, and we made thousands of % on those companies. Literally, that company that we financed, again, via private placement, was acquired by Energy Fuels, which is listed on the big board in the United States and is now the newest producer of uranium in the United States. We made a significant amount of money for that, for ourselves and our subscribers. Uranium's now based out for the past year, consolidated near 80, 85, as you say. Is it going to break out? Does it need to? It might be the question I would answer back. We're now at or near the cost of production. You're seeing new companies come on. You're seeing people start to turn the spigots back on. Like Amir's UEC has always said, when the price gets up, we'll start producing. Well, guess what? They're producing in Wyoming now. And I think it was telling you that you got to work through the bull market last year when we were in New Orleans. Things change. Before it was, exploration and development. And now you're going to start looking at producers and mills because, guess what? There's only one mill in the southwestern United States that Energy Fuels owns. And so, look, I think we're going to be in a uranium bull market for many years to come. It ebbs and it flows. I think you had your consolidation for the past year, and I would say that 2025 would likely be better for uranium than 2024. It's on many more people's radars now, is what I would say. It's on the CNBC now, and the tech investors are starting to realize.
So where, in that case, should people focus, say that they maybe they didn't miss that early part, but they want to go again. Where should they focus now?
Yeah, I like those not the Camicos, but I like to stay in the middle of the uranium place. I like the Denisons, I like the UECs, I like the Energy Fuels. I think those companies give you good torque. I think they give you good liquidity. They're easy to get in and out of, right? What happens in some of these juniors, and I've learned from experience because I made the mistakes, is, it's like Hotel California. You can get into them, but there might not be enough liquidity for you to get out of them at the time that you want. So you don't have that problem with something that trades on the NYSE or the NASDAQ. And those companies have already proven what they have and are producing or toll milling or whatever they're doing. So they're easier to look at and they're less speculative. And you don't need to be super speculative in uranium because you're in a bull market.
Okay. So we've covered energy quite well, I think. I can't let you go before I ask at least one question about gold.
Okay.
So we'll go briefly in a gold direction. We talked in April, and you had given us a pretty good gold price target, $2,450 to $2,500 in the next 3 to 6 months. Yeah, pretty good. So gold now above that. And what would your next 3 to 6 months look like for gold?
Flat.
Okay.
You had a really strong run. Trees don't grow to the sky. You've got to sort of digest, right? You eat a big meal like a python. You got to sort of just sit there and rest for a while. You've seen the gold sort of come down in the past couple of weeks after it ran to near 2,800. It tested the 2,530 level. And that's sort of the level for the next month or two. It needs to hold 2,530 for the end of the year, certainly throughout November and definitely into December. And then I think you could level out there and then we'll get into 2025 and we'll realize that the Department of Government Efficiency isn't going to be all that efficient and we'll start talking about a weaker dollar again, which has been really strong up at 107 on the DXY. Last time Trump took office in 2016, it was about that strong as well, and then went straight down for 2017.
Yeah, it's interesting to see some of these things repeat after the election. Okay, so we'll keep an eye on that as well. And I have this visual now of the python of gold digesting. Okay, last question. Gold stocks, are you still looking at gold stocks?
Absolutely. So they haven't, some of them have had the move. Everyone wants to know, why is there a gap between the GDX and the GDXJ and the price of gold? Why aren't they showing their leverage? It's getting closer. We were talking about this on the mining share panel here now. I can't pick a date on the calendar, but what I can tell you is that, if gold's going to stay flat, and I was saying this at a breakfast talk I gave, I know 17% of my sort of retirement money is in gold. Like, I can take that to 15%, still in a ton of gold, and take that 2% and allocate into the gold equities that should be benefiting now as that python digests this meal and the price of gold trickles to the bottom line from the mid-tiers and the majors, right? We hear that they've got to replenish reserves, all the things, right? That's starting to happen. You're seeing some deals. There's been some silver acquisitions in Mexico, Newmont shedding some non-core assets in Musselwhite and Orla picking them up. So things are starting to happen, and you've got the gold price now that's going to base higher, right? Like, we're not talking about going down to 2,000. We're talking about going down to 2,500. And so that's going to beget robustness, let's say, for gold stocks.
Okay, very good. I will let you go. I think you're off to go give your talk. Thank you very much for the preview. Any final thoughts?
No, that's it. I appreciate the opportunity to talk about that. And really, private placements is what I want people to start educating themselves about.
Okay, we'll leave on that thought. Thank you so much for stopping by. And once again, I'm Charlotte LeCloud with investingnews.com, and this is Nick Hodge of Digest Publishing.